motherfucker.
Yo, what's up? What's up, guys? It is February. Oh, it's March already. All right, March 2nd. March 2nd. Alrighty. Very good. Another month. Okay, so we passed through 2 months, and hopefully you bought all that UwU. Um, I was hoping UwU could hold overnight. So overnight trading on XOP was around 4 to 7%. So if it could have held that, we could have got like open at 20% and I would have just sold it and then got back in. But yeah, by the time pre-market happened, like 30 minutes of pre-market, it was already like dying. And I was like, okay, I don't need to sell this shit. I'll just hold and buy more. So if you bought the dip, good luck. Let's see if Brent gets back to $80 a barrel, and then we'll move on from there. Okay, guys. But yes, for the long-term holding, we just learned long-term hold trading. Yeah, you could have got out or attempted to try to get out pre-market, but I think by then it was just too cheap. Honestly, it was everybody wanted to rush out the door once we got to pre-market. Overnight, I don't think you could have traded, right? UwU is not traded overnight on Robinhood, I don't think. So if you got maybe on Interactive Brokers, I know Interactive Brokers has more tickers that they allow overnight trading, so you might check out over there. I haven't. I usually do not trade overnight. The liquidity is so tiny, compared to pre-market. Pre-market is already like very low liquidity, and then overnight, really, it's fairly new, so I don't think a lot of people use that too often, and it's probably a bunch of idiots there trading, so you might get caught in some bullshit, which I don't like. I like liquidity. I don't like to be like looking at like, whoa, what the hell? How do I offload these thousands of shares if nobody wants to buy them, right? What do I do? I just like do it a few pieces at a time or some shit. It's like, this is annoying. So usually I try not to. Okay, let's look at the SPY right now. Um Look at it. It just opened and then dipped right to that green line. Bam. And it's just like, and I drew this green line randomly and it just hit there right exact. And I think it was just based off of how did I get that? How did I draw that green line? It was a recent line. Was it because I just like chose these gaps here? These two. Okay, maybe it's because of these hits during October and November. Maybe that's why. But yeah, once we started seeing like there's a zone where they keep trying to hold it. So I thought like this green line had some significance into it. So I guess I based it off of this stuff here. And we just hit it right there in the open and we bounced. So now comes the waiting part, right? It depends on if there's escalation in the war. If there's going to be more escalation, if the Iranian regime doesn't die quickly, if they start like, putting more rhetoric, or they get the Houthis or whatever terrorist cells they have around the Middle East to cause more damage, so it becomes more protracted. But the real thing is oil right now. So all this other stuff really doesn't matter to me because this is all about tech, and all the tech earnings, like we said, Nvidia already reported there's nothing left except for Broadcom, Marvell, Micron, and Oracle. Oracle was a big deal last quarter, and it's probably going to be a big deal again this quarter because their AI spending is tied to a lot of debt that they cannot repay, apparently, because they did the model. A lot of these financial guys have already done the modeling, and they say, like, well, Oracle's overspending on AI just to, compete, and they're going to burn through so much cash doing that. They can't make enough revenue, cash flow to support paying the interest payments that they're already buying a lot of CDS. That's what happened last time. And you think like it's only going to affect Oracle. Apparently, just like the scare of like, whoa, all these AI companies can't spend anymore, then there's no more growth. So all it is, like, everything downstream gets affected. So, okay, one stock to look at, AAOI. I'm not saying you should trade it. I'm not saying anything about this, okay? But it had earnings Thursday, and or Friday morning. So Thursday afternoon to Friday morning. I don't know which, but it popped. It popped 50%. This was one of the first stocks I ever looked at when I first got into trading, because before that I was just a buy and hold guy. Okay, I just buy and hold Tesla, buy and hold AMD, buy and hold Apple, buy and hold, buy and hold. I rarely said like, okay, after 3 months I'm out of here. No, if I bought something, I would keep buying at a certain range and hold it for years. So when I first started trading, I looked at this stock because it had the qualities of a tradable stock, right? Trading at the shorter term is all about looking at psychology, Longer term, it's all about fundamentals, okay? It's just the fundamentals of a company. But when you want a tradable stock in the shorter term, you want volatility. So that means higher beta meaning it has moves that are a lot larger than the S&P 500, meaning more risk. So they drop and rise in a way that could blow up your account if you're trading it and you don't know what you're doing. So this was a good practice stock, I would say, to learn about trading. And so it was up 50 to 60%. It's up 18 today. Why is it doing this? Because there's a lot of psychology going on in this stock, and there's always been psychology in this stock. So let me zoom out to the weekly. Okay. So when I traded this stock, it was around 2017. So from 2016 to 2017, we saw it rise from $9 to $10 up to $20 to $30. But that wasn't the end of it. It went all the way to $70 and $90. That was the peak. And the reason why was because there was a lot of data center spending. Does the story sound familiar to you? Now the story is AI spending. Back then, it was quote unquote data center spending, meaning it was just general data center server expansion, So it was more cyclical. So there's always a season when Amazon or Facebook need to buy more servers to expand for growth in users. But after that, once you have enough users, it saturates, right? AI is what's growing things now because there's more and more people wanting to use AI and more powerful AIs, which is a difference. So it's the same number of users, right? Or more, or like people have just started using more advanced AI. So it's like, oh, I want to buy the latest subscription to the newest models, all right, of AI or algorithms of AI. And then what happens is like, well, you need to expand the server space. So this is what happened. So in 2023, we hit a bottom here, and then this was moving alongside with the markets. But now we see in 2025 into 2026, we have this next leg up here. So there was this little expansions, contractions, expansion, contractions. And you see like it's just zigzagging here in this range between 8 and 40. And now we've broken out. So this is probably going to go to 90. I'm not telling you like I would buy this and then expecting it to go to 90. All I'm telling you is that you should watch out and use this stock as a bellwether, okay? Because if this stock gets too happy, that's probably the peak. It's a very good bellwether because it shows you how stupid people are just to buy this dumb stock because it's a poorly run company. It only has one like major or two major data center companies as customers. This is the reason it had its bubble in 2017 to 2018 because it was relying on either Facebook or Amazon as its single customer that created this growth. Because once they stopped buying those chips, it just went down because their traditional customers are cable TV customers. So traditional optical communications for cable TV, which doesn't grow at all anymore, right? So once you lost the high growth customers, then the rest of the years you don't have growth. So then nobody wants to buy the stock. They don't want to overpay and buy the stock. Now they're overpaying and buying the stock again, right? This is reflexivity. We talked about this. This is George Soros's way of making money. And so that's why you see these crazy moves back up, and you'll see it bubble again, right? Once we broke this level, very important, 46, it's going to go to 90. It might go higher. And then just watch this stock. I'm not saying like you should or shouldn't trade it. You can if you want to, but I wouldn't. I'm just not a risk taker as I was in 2017, 2018. I'm definitely a different type of trader now than I was then, because this was just a practice, and I wouldn't touch this thing because you can see, like, at any given moment it could turn on a dime and go another direction, which is great if you can time it correctly, okay? And so this thing I would rather use right now as a way of saying, like, I know when the bubble is going to pop. Okay, so I'm going to follow this stock from now on as a way. Now that it's broken 46, this is a good metric to follow, I bet, as a way to gauge the psychology of the markets. Okay, so let's see what else we got. We have some earnings this week, but I haven't checked which ones are important. I don't think any of them are important. Maybe there's going to be some Chinese earnings that I'll have to look at. But we'll discuss that another time. Okay, I don't have much time this morning to go through any of that. All I'm gonna do is, like, let's look at Leonardo. So this had earnings last week. It's an um, Italian defense company, very good. So I was watching to make sure it could keep this area, and it looks like this will be part of the boomer portfolio. This is another defense company, KTOS. I'm still on the fence on this one. It goes, it pulls back, it goes, it pulls back. I don't know yet, so we'll see. Anything else? WGS, like, yeah, we want this to go down to maybe $40. I'll give it a gamble because it moves so clean that, like unlike this is a risky stock, just like AAOI, but the difference is because once it has a trend, it moves very clean, right? It goes down very clean. Like, you can see how smooth it goes down. Like, wow. And it goes up very clean. So once it gets going again, like, AAOI is just jagged. It's just jagged. This is intolerable. I can't stand something that just goes up, pulls back. Like, so it goes up 50%, pulls back 20, 30, 40%. It's like, come on. I don't want to deal with this. I don't like this. It's great for anybody that wants to be an active trader, though. So if you want to keep trading and flip-flopping every 2 weeks, 3 weeks, like that, that's fine. I just want to keep something smooth for months. So this is more my speed. I think if it gets to 40, I'll definitely get it, because then we're on our road to maybe 200, 300, 400, 500, maybe even 800, back to when it was at IPO. It IPO'd at around 200, popped to 800 before falling. It fell. So this was a terrible time to IPO. It IPO just after all the COVID things happened, and then we had elections, and then it popped on the bubble of biotech, and then once the biotechs, like, started peaking out, it just followed everything down with the interest rates going up. So this was a terrible time to IPO. But you call those roller coaster stocks. It depends on the roller coaster, right? They all have their own rhythm. Some roller coasters have tighter curves, I guess you want to say, or more frequent curves. This one has a longer, so multi-year, multi-month down, multi-month up. Much better. This is much better for me. But yeah, you pick your poison. It depends on your aggressiveness and how often you trade. So that's always going to be influencing your thing. Okay, looking at UwU, this one had earnings. Looks like it's stable up here. So uranium might be another play. So after we attack oil, we'll get into uranium. So let's look at how OilU's doing right now. Okay, 5%. It's okay. Come on, just get back up to 20%. I don't have time for this. But overall, if you bought it from when I told you to buy it down here at $30, I'm hoping still for 100% gain by the end of this month at 60. Okay, so it really depends on the Brent oil right now and the Strait of Hormuz. Okay, so UK oil, what was it? Yeah, we're still diddling or just below $80 a barrel. Perfect. Now, if we go look at gold kind of popped, but fizzled, kind of like what I expected. Usually gold, they build up into an event. So a lot of people that were buying gold in this, like, once we had that dip into February and people just wanted to buy gold again, like, I think they were just hoping for war at that point. Most of the people buying from here early on in 2023 to 2024 up until late 2025, those people were buying because they were following China. China was just accumulating to store up gold because eventually they do want to get off the US dollar system, right? Everybody's tied to the US dollar. Everybody wants to get out eventually. So accumulating a lot of gold will give you a buffer, because once you peg your currency back into gold, then yeah, that will contain things, and oil too. China also wants to tie their currency to oil, so actual commodities. Right now we have a fiat system, meaning it's bullshit. All the money in your pocket is monopoly money given to you by the Federal Reserve. Yeah, gold popped, and of course it's gonna drop because like people were just buying for war, and once the news happens, you sell the news. There's nothing left, right? The only reason you would buy it now is you think the war is gonna expand into multiple countries, and this is gonna take longer than a couple weeks. That's probably about it. Silver. Yeah, silver was the worst one because it barely even moved in futures market last night. And then once the market opened fully, you have the liquidity enabled, and then people just got the hell out of there. So, okay, that's it. I think that's it. We're stuck in a range for gold and silver, so that's why I said like I don't bother with them anymore because they're gonna be zigzagging for the rest of the year. The real interesting story this year, as I've said, is oil. So it's all about oil, and hopefully we can continue up. China's going to start ramping up their consumption of oil because now they're like, well, we can't play nice with the U.S. anymore, and we will have a trade talks again with China coming up too, with Trump. So that'll be interesting. Now that Trump did this, let's see how China talks with Trump now. I don't think they're going to be friends for sure, right? Even like not even frenemies maybe anymore. Maybe full on enemies. I think we're done here with it. I think, yeah, the U.S. has played their hand, and China now knows how far Trump is going to push it before midterm elections. Once we have midterm elections, it's over, right? It's probably going to be over. All the GOP is going to lose all the seats and everything, and there's going to be a lot more pushback, and Trump is going to be lame duck for the last 2 years. So Trump is probably going to try to rush anything he wants to do this year. So it could get crazier with China. So they're going to talk tough to each other, I think. So watch out, guys. Watch out, guys. Okay, is that it? Is that it for now? Lunar eclipse today. Okay, we know about that. Oracle. Okay, let me go through some articles real quick. So let's see what the Nasdaq. How's the Nasdaq's doing? Same thing. Okay, it already covered the gap. Who cares? Semiconductors. Semiconductors. Still weak here. Barely half of this yellow zone has been covered right now. It tried to get back up to the top, and it's pulling back. I might increase my shorts on this one. So I did build a few shorts when it started dropping here on Thursday after Nvidia, and I started buying a little bit more on Friday when I did this. Okay, and I might buy more. So SOXS. So if you want to short semiconductors, use that one. So SOXS. And of course, you have to remember, so that's short semiconductors 3X. 3X, okay. So SOXS, short semiconductors 3X. So that's 3X leverage for you guys that don't have options and want to just short it pretty simply. You don't need to get a margin account. You can just buy it directly with that ETF and short the shit out of it. Okay. And then we're going to have a IGV. So that's the other ETF. We got to look at software. This was the most beaten down ETF so far this past several months. And as I said, it's over shorted. So, and Samantha the Duke also told you guys to watch out because even if you're bearish on this sector, it has to bounce first. It has to recover because it's just oversold here. There's just too many puts here. So it can't get any lower. There's no demand for shorting it anymore. It's oversold. Retail is buying it up like crazy. And you can see it with Palantir. See, Palantir is up 5%. So if you guys thought this was going to break 125, the chances got lower and lower each time. It just recovered. It keeps bouncing off of near there, and it's just not, I think that's why I said like short here, right? I told you guys to short this thing mid-January. Like, I don't know who the heck is trying to short it down here. You really think it's gonna be so easy that it would just break this line? This line is so important. This was the previous top in February of 2025. So this was a big this was actually the end of the trend. The trend that started in August. So when I told people to buy Palantir, it was around here, right? June, July of 2024. When it was $20, $25. So this was the last chance to get in at that time. But I told people outside, in real life to buy it here. When I saw Palantir get below the IPO price, it was like, okay, it's time to buy it. But of course, like back then, the market looked like shit, right? Everything was bleeding that year. All the Ukraine stuff, people were pessimistic as hell. That's the time to buy. When the news is so pessimistic, it's time to buy. Now the news is all optimistic. It's kind of like, well, so if Palantir gets back up to 160, it could. So I think I mentioned that like you could trade it on the long side. So you could trade it down here and then hope that it could get back at least to 140, 150, which is getting close to 150 right now. And then we can just you could just sell it if you traded this. I don't know if you did, but I would watch it very closely once it gets to this. This is the significant red bar here in January of 2026. So this is a weekly bar. So look at the midpoint around 156 in Palantir. So if it gets back up here, this moving average moves down to 18, and then you would short it again over here, and then it will make its next move down. That's when it has enough energy to finally break this line. So if the market really wants to die in the next few days, let's say we get this up to here by Wednesday, okay, then yeah, I would probably short it again. That's probably what I would do. Up to you. But this is oversold. You see this whole sector, the software, yeah, it's oversold. So you're gonna see stuff like Zscaler, ZS. Okay, you'll see this pop. This is a potential other stock too that you could look at, because this has been there was a lot of volume here during earnings. So I'm wondering if there were a lot of buyers there, and this thing could be a very good long from 150 to 200. But we're running out of days. We're running out of days this week. I don't think it's going to be quiet for too long. Every trading day is so important now, because any kind of news from Iran could happen at any moment, and there's going to be escalation, and these guys will just flip the hell out. Or there could be some AI news that comes out of nowhere, right? So we have to be worried about these things. So let's see. Oracle will report earnings. What? So next Monday, yeah. Not soon enough. So nothing this week. I don't think there's any important earnings this week. It's probably just going to be Chinese earnings? China's already starting to report earnings. So it's probably all Chinese earnings. Alibaba reported already. So that's the first one. Usually once Alibaba, Baidu, once Alibaba and Baidu, the rest of this week is probably all Chinese earnings. So no important American earnings. I doubt there's any. But I'll look anyway, and I'll tell you later, maybe tonight. But I haven't looked. I haven't paid attention. I'm really not. I'm done with earnings as far as I'm concerned. There's nothing important. Hims. Man, this used to be a good stock. Oh, okay. I don't know. I don't think it's definitely at a support zone, but I doubt it's gonna fly back up. I would rather buy a software company to see if it pushes up like Zscaler. I mean, the other thing that makes Palantir want to go up to is the Anthropic news. I don't know if you guys know about the Anthropic news, so I might cover that in one of these tweets when I go over these tweets I see here. Okay, any other one? Oh, XYZ. So Block. Okay, this one is interesting. It had layoffs, right? XYZ. So this one, owner of Cash App, right? So this used to be called Square. So they keep changing the name, right? It used to be called Square. Now it's Block. So it's XYZ. They changed the ticker symbol from SQ to XYZ some time back. But this has been a boring stock ever since then. This is Jack Dorsey's company. So when Jack Dorsey left Twitter, this is the only company he had left that he's goofing around with. So back in 2022, you see this? It's a dead stock. It goes nowhere. There's no growth. There's nothing. And I think it just had a bunch of layoffs. So they basically said they're replacing a lot of people with AI already. They're reducing costs, and it popped 20%. So this might be the beginning of a lot of software companies trying to figure out how to optimize their workforce and get rid of people. People are very expensive. Health insurance costs in California is very high. So this is based out of Oakland, California. So I'm pretty sure, yeah, they definitely want to get rid of people. Health insurance costs, like last time I worked in a company, right? Yeah, they were always trying to get us to go down to the lowest, crappiest HMOs because they didn't want to pay and subsidize our healthcare. Like the costs were just getting too high, and people are always aching, right? They're always like, "Man, I got a kid. I don't want to change my healthcare provider. My doctor's great." Yeah, well, see, when you're single, you don't have to worry about those things. But yeah, health insurance was very important for people with kids and families, especially when you combine them with your wife's thing. Yeah, so that was more important than the salary, honestly. Yeah, having good health care from provided by the company way more important than salary, and a lot of times for those folks. Okay, let's see. Okay, we covered that. Good. So remember, Leonardo DRS. So I'm gonna be on watch on that one. Added to the boomer portfolio. SGML, lithium. Okay, it's stable. It had a drop on Friday. So after the news on Thursday, it popped, or Wednesday to Thursday pop, pull back, but it's still trying to stay close to 15. Okay. Okay. I might increase my position here and start telling people to buy a lot of it. So if you're not in this one, pay attention, because once it breaks 15, it's going to fly to 40. So it's been hanging out here, right? Below 7 all of 2025. And then we got a nice boost about lithium. I think it was like one of those Chinese companies stopped dumping lithium everywhere. So, commodities like this is very highly manipulated by the Chinese, so the price is there. So once they stopped manipulating, it started like, okay, now we're getting some recovery. But SGML by itself is very volatile, and we still haven't had earnings yet. So I still say, like, if you play this, be careful. You're playing it for the long haul, so try to get a good price. I would recommend you try to get closer to 10, but it might not be possible. So after their presentation to all those Canadian bankers back last week on Wednesday, it looks like it'd rather hang out closer to 15 than 10. But I'm not saying it'll never get back to 10. So if you put this on your watch list, say like, yo, if this stock gets below 12, text me. Then yeah, pay attention. Okay. Right. That's how I do it. I just go like, okay, if it's below 12, send me a text. You know what to do. I'm assuming you guys have services that do this. So you know how to go and get a text message from some service that tells you when a stock price goes above or below a certain level. Okay. I'm assuming you guys know how to do that. That's how I do it. And then I know what to do when I get there. Or you could just set an order in. You could just set an order. Okay. You could do it that way too. I don't know. I like to be more hands-on. I don't want to automatically set orders all over the place where like, okay, SGML below 10. I mean, how did it get to 10, right? You have to look at the candle too. It's not just like, oh, it goes below a certain price, I buy. It goes above a certain price, I sell. I got to look at these candles. I got to look at the way the chart is, you know? Like there's a huge difference to go below 12 when it does this versus when it's doing this, right? So there's a whole there's a difference. So because we got to look at these things holistically. Let's put it that way. Holistically. How about that as a word here for the day? Okay, hot. No, nothing else. I don't think I needed to talk about anything else. Axon. Okay, Axon. Maybe I'll talk about that one. Axon and Okay, AZN. Okay, that's more important. Let me talk about AZN. So AstraZeneca. So I mentioned this one. This is the largest, basically, company on the FTSE. It's okay, FTSE 100. So that's the London top 100 uh, UK companies. So AstraZeneca has listed on the NYSE. Okay, and now we have a lot more liquidity than before. Before it was an ADR, American Depository Receipt type stock, which reduced its attractiveness. But now it's fully in the US stock market. So now you see a lot of volume come in, right? So now you see these huge volume bars come in after it changed its listing to the NYSE. And I am now more interested in this stock. Definitely, definitely. So if you remember AstraZeneca, they were the ones that helped develop one of those COVID-19 vaccines with Oxford. So very popular company now, and it has a good trend. I think a lot of these type of healthcare companies are going to be a lot more popular in the coming 2 years, 1 to 2 years, along with oil and gas. So this one definitely will have to get in the boomer portfolio for sure. And I don't know how high it could possibly go, but it could go pretty high, I think. It has a good trend. Definitely has a good, very nice trend from 2016. It's still very stable. So now that it's fully integrated into the US stock market and it has higher volume now, that means a lot of people will come and push this thing. So that's good. That's good. All right. Let's see what else. Anything else? No, I don't want to talk about any of those. Nope, 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 nope. Okay, let's look at Bitcoin. Bitcoin was pretty boring, honestly. All the action was over the weekend. So unless you traded it over the weekend, I don't think there's too much interesting things to happen to it because it's still in its zone. So yeah, you could trade it here, go back down. So if you were trading the weekend, you could have been shorting from Friday into Saturday, go long, go back up, go down. So now we're like back up and we're trying to get through here, right? So it's like, oh God, okay. Well, okay, so what do you want us to do about this? What do you want us to do about this? So let's look at MSTR. So we're back here. Hmm. Do I want to risk going long for a breakout now? Or do I wait? Am I going to be more patient? I don't know. I haven't decided. I definitely said like there's a good chance Bitcoin can make it to 80K for the next 3 weeks at least, I think. 3 weeks, about 3 weeks with the cycles. So this could be it. This could be the breakout people want. But this could also be a trap. I'm very suspicious, you know, because I don't know if this was a good test over Saturday. Was this a good enough test? So we tested back in Tuesday to Saturday. So people who bought here in February 6th on the Friday here to Saturday. So is this significant? Is this enough? Or is this just gonna trap people again? Is this just gonna go up to 70 and then some more news comes out with Iran and it just rolls right back? Damn. Hmm. That's a tough play. That's a tough play. I think if you did buy MSTR at the bottom of these ranges here, so when it touched 120 and below, that's fine. That's a good place to enter. So now you're just wondering, yeah, is it finally ready to break out, go above this dashed line at 140, and we're ready to rock and go back up to 170? So this is a perfect range. This looks nice, very stable. So I think there's a lot of energy being built here. But then again, this could just be a trap to retest 107. So that's something you also have to consider when you're looking at this stuff. So a lot of people, they're more conservative. They would rather wait for this to have a breakout. So they'll be like, okay, I want to see you break out of 70K. Once you get there and then retest like 68 and then hold 68, then I'm certain and I'll buy. Other people, they'll do this. They'll wait for it to drop below this pink and then they'll go like, okay, I buy here at 63, okay? And then when it goes up here, I'll buy more. And then when I'm certain, yes, I'll keep holding. So that's two styles. The other thing is for the people who just don't believe any of this and they just only will get in when it drops to 60 again and retest that level and lower, right? I'm on that camp. I'm on the last camp. I want to see the retest of 60 and lower because I'm not really certain. There's a lot volume here, you know? If this was a durable low, I shouldn't see a lot of volume here on this second half, you see? It's like there should be very little volume. This was like enough volume for a Saturday that makes me kind of like my eyebrows kind of raise. I'm going like, damn, that's quite a bit of volume for a Saturday because Bitcoin now is tied to the ETFs on the market. So you rarely see good volume over a Saturday, Sunday morning. So Saturday, the whole Saturday into Sunday morning. So makes me curious, makes me wonder. So I'm definitely going to keep an eye on it tonight. So we'll see what we do. But yeah, I think any bulls that got in should be happy. I think that does look good chart wise. Very good. You get above this moving averages now. So for MSTR, right? It just looks a lot better. It just looks a lot better, a lot cleaner than it did for the last week. So this looks a lot better for sure. For sure. So I'll keep an eye on it. Might be something that we will have to go long on. All right. Are we okay? 40 minutes. Anything else I want to talk about? I think I'm going to talk about some articles. Okay. I'll read this one article here and let's see how many other articles I can read. Put on some background music. And then later today, we will read the book of Esther. All right, guys? All right. Let me see. Sunspot cycle says unemployment to continue rising. All right, let's look at the sunspots. So sunspots tell us that we will have unemployment go up from here on out. All right. Perfect. That's perfect. That aligns with my 2027 market crash predictions. Okay, every president wants to have improving jobs numbers, and they all do what they think is necessary and appropriate to achieve that. This includes President Trump, but he is fighting against a more powerful force with a long track record. It turns out that the sunspot cycle has a very strong correlation to the U.S. unemployment rate. After one adjustment, this week's chart compares those two sets of data with the plot of sunspot numbers shifted forward by 3 years. The bottom of each sunspot cycle coincides nicely with the bottom for the unemployment rate 3 years later, and peaks in unemployment tend to echo peaks in the sunspot cycle. With that same 3-year lag time, the peak month for this current sunspot cycle was in August 2024. So if we count forward exactly 3 years from that, we get August 2027 as a projected top for the unemployment rate. It does not always work out exactly to the month, but that is a pretty good rule for planning purposes. So August 2027, unemployment. And here's the other cycle from Larry Williams, a 6.3-year cycle of inflation. So this thing looks like it peaks somewhere late 2027. So sometime in late quarter, let's say maybe October-ish, okay, we'll have high inflation and high unemployment. Oh man, that's what the Fed doesn't like. The Federal Reserve can't handle both high inflation and high unemployment at the same time. You know what that's called? That's called stagflation, baby. That's called stagflation. We had that before, and those were not good times. So watch out. That might be what we are looking for the market crash right there. That is it. Morning, gobbledygook. So I think late 2027, we'll have to see some peaks here coming in. I think the stock market, if it sniffs it out, if this is going to happen right at that time, I'm still not sure. This could just be pushed out into 2028. But the market will smell this beforehand. So the market will peak. And we're probably peaking this year, okay? So yeah, you better shift everything into oil and copper, any kind of commodity type stocks, materials, and healthcare. So that's why I was bringing up AstraZeneca. So vaccines, drug manufacturers, they're usually the safe stocks to hide out in during a peak like this. So let's continue. It is also important to understand that sometimes outside events come along which disrupt this nice correlation. COVID was an obvious one, and we cannot really blame this sunspot model for not predicting the 2020 spike in unemployment. There was also an exogenous spike in 1954 after the end of the Korean War brought a slowdown in government defense spending and a rise in unemployment. Perhaps the biggest example of an exogenous event was when the Fed in the mid-2000s kept interest rates too low for too long, fueling the housing bubble and its eventual collapse. That led to the great financial crisis in 2008, which did not fit the timing suggested by the sunspot data. But by the late 2010s, the two data plots were back into correlation again. So, again, you have to understand, looking at all the cycle stuff, it doesn't predict like wild events that come out of nowhere, right? It might suggest something might be coming down the line. So all we have to do for now is to watch unemployment and inflation numbers as we get our new Fed chair, right? We're going to get a new Fed chair in May, and that's going to affect things. Okay. Whenever I show a comparison of data like this, I always get asked what factor could explain the relationship. Wanting to know what is a natural human tendency. We all want to know the why. It is not always necessary, though, to get after the why if the is can be established well enough. We have good data on unemployment rates going back to 1947. Over that period, it is a well-established correlation, except for that handful of exogenous events I mentioned above. It is pretty clear that something is going on here, even if we cannot explain what it is. Some analysts have hypothesized that sunspots affect the weather, which affects agriculture, and thus somehow flows through to unemployment. But the data of sunspots and agricultural production do not match up as well as these data. Another theory is that the charged particles emitted during higher sunspot numbers affect the wiring in humans' brains, causing us to collectively change our moods. And we've already discussed gravity due to the moon, the sun, alignment, and the tilt, and the 18.6 year cycle, and all this other stuff. So watch the previous streams I did on that. I think it was 2 streams ago, or it was the last stream. I don't remember. But again, we will read the book of Esther tonight, so I'll just be reading that book from the Old Testament. So that's just how we're gonna play this game and see if my mood will improve. That is an interesting hypothesis, but I know of no way to construct a satisfactory experiment to test that one. I have personally seen enough evidence of this relationship working for long enough that I can accept its validity, even if I cannot explain it. Others may need more evidence. I invite you to ask yourself, for how much more time would it need to keep working before you could accept that it is valid? The last sunspot cycle bottom was in 2018 to 2020, and the period is about 11 years. So we can figure on the next sunspot minimum being due 2029 to 31. Yeah, I do expect some big thing to happen during the 2030s. And thus, the low for the unemployment rate 3 years later in 2032 to 2035. We do not have the full data for February 2026 yet, but there are already several days in February with 0 sunspots. It can be argued that this cycle is quieting down faster than normal. If so, that could matter for improvements in jobs data, but not until the 3-year lag time goes by. Oh man, and we already read those like fan fictions about the AI stuff. Yeah, AI taking all the jobs and all those things. So, well, we'll see. Let's look at the Bitcoin 1 hour cycle chart. Might as well end with that, and we can close out the hour. Okay, so we got peaks here at 85 hours, 85 hours and 137 hours. Okay, those are the cycles right now. Okay, for the Bitcoin. So we should hit a bottom tomorrow or later today. So that could be it for Bitcoin, and we should be rising from there, at least on the small scale. If we look at the daily on Bitcoin, right, this is what I've been showing for a while now. We should hear this. We should be able to get a pretty good pump into late April. Okay, so for at least several weeks into March, right? And then if it keeps on going further, we can go all the way through tax season. Yeah, I think if this actually goes a lot longer than we expect, man, dude, bro, it might even go past 80 back into 100,000. It might trap a lot of people into the summer, right? They'll be like, "Oh, Bitcoin's back at 100,000." And then the next flush from August to October, February, October, December into January, into next year to February. That might be a better time to increase your short positions because this move up, if it actually goes up to 100,000 on Bitcoin, that would be a nice trap set. So there we go. Of course, it has to change its trend. You got to change the trend here. Otherwise, this thing is just going to go sideways. Okay? Into next year. Sideways is quite boring. But, well, you could trade sideways ranges, of course. But I don't tend to like those. I like trends. I need to see a trend. I hate guessing the U-turns here when it goes up and down. And we're at that area where we're just U-turning right now. I see MicroStrategies just touching the 140 mark, right? That's an important area. So if this thing later today just drops down, okay, Bitcoin drops down, yeah, get out of the pool. Holy shit. It's just building energy for it to go down to below 60K or for some reason. Like, let's look at the NASDAQ here. Okay, yeah, it's still stuck there. NASDAQ hasn't turned anything yet, so just watch out. Okay, guys, be safe out there trading. I wouldn't trade this because at any moment new news will fly out and you'll just be caught in the noise. Okay. I think I've already mentioned the Netflix thing, but if you haven't heard about the Netflix deal, that's also something, but I don't think I'll talk about it right now. Okay, so this is the mark. Okay, so nothing sticks out to me here. Let's just look at the daily. Let's look at the daily. Yeah, we haven't completed the 13 count on this. On the sequential, right? Yeah, it's still trying to complete a 13. Usually when you see this, it's like, yeah, you look at the way it did it over here, right? You got the 9 count, and then once it completed the 13, then it made an attempt to go up, but this was a failed attempt, and then it just collapsed the next one. And now we're just trying to do this sideways. I think we have to wait for a 13 before I believe that this sideways move is completed. Honestly, that's how I feel, but I'm not an expert on these indicators just yet. But from what I've seen, this is how it's gonna play out. You're gonna have to get this 13 count completed before the sideways move is over. So even though it looks like it wants to initiate a new trend here, I'd be careful this week just in case. So yeah, just telling you just to be careful, that's all. I don't think I'm gonna predict anything either way about it. So we're gonna have to wait for the whole astrology to pan out, and I might have to get someone to help out on the astrology stuff, but I don't know if they have time. So you can see this Reddit article here: Black Monday, October 19th, 1987, October 17th, 2007, and April 7th, 2025. This was the basically the near the bottom last year. So yeah, they charted out all the stuff for it. So these guys went wild on the whole thing. Let me get the images. So let me go to the original post so you can see how crazy they're on this. It's not like I'm saying I believe in any of it, but you know, like that. Yes, you see. Yeah, okay. Let's chart all the major crashes in the markets. So yeah, just be careful out there, guys. I don't want you to get caught up in something that happens because of Purnam. Okay, so we're gonna have our lunar eclipse. So if anything's gonna go down, it still might be possible that there's something worse around the corner. I would caution anything, and we'll get back to AstraZeneca and all this other stuff because this is more important, I think, the AstraZeneca. So okay, any other articles I want to read? Maybe 2 articles here. Let me see if I can get through them quick. With the AI stuff. And then we'll move on. So Amazon's $50 billion OpenAI investment could hinge on AGI. So that's full AI, the full general intelligence. Amazon's proposed $50 billion in investment in OpenAI reportedly has some conditions attached. As the information reported Wednesday, sources in contact with OpenAI executives say the decision to invest could depend on whether the artificial intelligence startup goes public or if it achieves artificial general intelligence, a term for AI that functions at the same level as humans. Previous reports have said OpenAI is targeting the fourth quarter of 2026 for its initial public offering. While the investment is still being negotiated, terms say Amazon could invest an initial $15 billion in OpenAI, with the remainder turning on whether the company reached AI or listed, the sources said. Or listed. So I think they meant AGI here. Okay, so either the company gets the AGI or it went IPO, then Amazon will give it $15 billion. Okay, so they've contacted Amazon and OpenAI for comment, but have yet to receive replies. Amazon's proposed investment is part of OpenAI's current round of funding, which could exceed $100 billion and value the company at $730 billion before the financing. SoftBank and Nvidia are also planning each invest $30 billion in 3 installments, while past reports had Microsoft planning to invest low billions of dollars, the reports added. Sources said the company could invest even less or not contribute at all. Okay. Microsoft has for years been OpenAI's biggest patron, investing roughly $13 billion into the startup in exchange for a 20% share in its revenue and the right to resell OpenAI's models. Okay. Let's go to this one. Information. OpenAI in talks to raise at least $10 billion from Amazon and uses AI chips. Amazon is in talks to invest $10 billion or more in OpenAI, according to 3 people familiar with the discussions. The valuation would be higher than $500 billion, one of the people said. The Amazon investment would help OpenAI afford some of the commitments it has made to rent servers from cloud providers, including from Amazon Web Services. OpenAI last month announced it would spend $38 billion renting servers from AWS over the next 7 years, making AWS one of at least 5 cloud partners OpenAI uses to develop its artificial intelligence. The deal could also help Amazon find a new customer for its Trainium AI server chips, which compete with the NVIDIA AI chips that OpenAI primarily uses today. As part of the deal being discussed, OpenAI plans to use Trainium chips, 2 of the people said. Amazon, however, won't be able to sell OpenAI models to its cloud customers, as Microsoft, which owns about 27% of OpenAI equity, has secured an exclusive right to do so. Amazon and OpenAI have discussed commerce partnership opportunities, one of the people said. OpenAI wants to turn ChatGPT into a shopping hub and has discussed earning fees for referring customers to retailers. It isn't clear whether Amazon OpenAI deal would involve any arrangement related to such features in ChatGPT or AI-powered shopping features that Amazon is developing for its own apps. OpenAI also wants to sell an enterprise version of ChatGPT to Amazon. The talks are ongoing and the terms could change, 2 of the people said. The Amazon financing could prompt a broader fundraising with more investors, according to one of the people. Okay, so yeah, there's a lot of talk here, a lot of money being bandied about. This is going to affect how it goes downstream, and it's going to affect how stock markets react, right? So we saw AAOI go up 50 to 60% on Friday just based off of earnings because of its customers. Just having one customer that's going to drive everything, like Amazon and Facebook, is enough to turn those tiny little stocks into like big tradable vehicles for you. So if you want to trade, those are the stocks to get into. Okay. Good luck though. I'm not a risk taker anymore. I've given up that role. But you can if you want to. And here we go. Here's a tweet just talking about this. The AI spending boom is destroying big tech's cash. Okay, so there we go. Let me get rid of this image blocking, ad blocking stuff here. Reload it. The AI spending boom is destroying big tech's cash. The combined free cash flow of Microsoft, Amazon, Alphabet, Meta, and Oracle fell $60 billion from the 2024 peak to $190 billion in Q4 of 2025. By Q4 of 2026, it is expected to collapse $30 billion. This comes as they are projected to spend over $600 billion in 2026. According to UBS, this level of CapEx, so capital expenditure, will consume about 100% of hyperscalers' cash flow from operations, compared with a 10-year average of 40%. This is wild. So, yeah, this is eating away at their free cash flow. This is going to affect the valuations of these stocks, right? Watch out, Oracle. Oracle is the worst offender right now. And the other guys are going to catch up and offend even more. If they're all competing with money just to make better AI, hopefully this turns into profit. Otherwise, they're just going to spend themselves into death. Because if the economy turns around the world, it's a global economy. Remember, it's just not going to be one country. If the Americans sneeze, the Chinese sneeze, somebody sneezes, Europe sneezes, everything goes down. Japan, yeah, everything starts going, or the disease starts going everywhere, and people don't want to spend. If they stop spending, right now you have money you can spend. If you don't spend, you're gonna be like, woo, shit, I don't want to spend anymore. People hold their purses a lot tighter, and then you don't have growth, and then you have a spiral, right? And then you have recession. So that's how it starts. So right now they're spending a lot, so the stock market is happy until it's not happy. If you overspend like Oracle, it's not happy. It's not happy at that. Okay, so yeah, that's something to worry about. All right, it's an hour. I think. Let me see. Any other tweets I gotta go? Thank you, Pocket Aces. Thank you. Yes, I think it's more people listen to me and bought the oil than me making the money, right? I want all you guys to escape your wage cage. So, and even if you don't escape your wage cage in your lifetime, it's just that the fact that some of you probably have kids. You teach your kids and grandkids about how to play the markets, like I do, and skip all this because it took me many years to accumulate all this knowledge. And you could just learn it just through osmosis by listening to me, and then you just tell your kids little tips like, oh, don't do this at this time, don't do that, just little stuff like that every day until like they remember it. Then by the time they have money to invest, they'll be like, or trade, they'll be like, oh, I remember this, I remember that, and then they'll be better than most average bears out there. So let's see what else. Let's see, is that important? Oh yeah, this one's important. How about this one? Rush of retail investors into software stocks is accelerating. Retail investors now reflect a record 8% of total trading volume in the S&P 1500 software and services sector. This percentage has doubled since 2022. So that's during the bear market. The 21-day moving average of this metric is up 7.5%, near the highest on record. According to JP Morgan, retail trading activity in the sector has historically only been higher than it is now in 3% of cases. The most popular names among retail investors include Microsoft, ServiceNow, and AppLovin. So MSTFT, NOW, APP, those are tickers. Individual investors are also heavily buying Nvidia and Broadcom, AVGO, and Broadcom hasn't released earnings yet. So there you are. All the retail guys, they're loading up. They've been buying the dip. Is that a good sign or not? We will see. So next time, we will see how that goes. What's up, Ember? Yeah, I gotta go. I gave you everything I need to say today. I'll watch Bitcoin. See if it does anything. I don't know if oil can hold 80K or not today. Maybe it'll just keep dipping. So anything could happen though in the next 2 days. Everything's in flux. So that's it. But so far the Nasdaq's happy, right? The S&P's happy. It recovered from the morning. People bought that dip. Was that a mistake though? We will see. But I think if Bitcoin can seriously break 70K, we're on the road to 80, 90, 100K for sure. Then that's it. We are done. But like I said, watch out. It could be a trap. I've seen this before. I've seen this story before where they go like, woo, shit, yes, we're done, we're free. And then all of a sudden it's just like, oh man, it was a trap. So that's the game you play when you have war, right? It's always about the news. But yeah, I'll see you guys later tonight. We're gonna read the Book of Esther. Also, please subscribe to Be Better Network. Universal Jones's thing. He might have a panel this weekend on Saturday. So, oh man, it says February 7th. It's supposed to say March 7th, I think. So in any case, yeah, you get it. You get it. Let me edit it. But yeah, we'll see. We'll see how that goes. March 7th. But it was scrolling in the banner. And also subscribe to Schizo Spud's channel since he's more active now. So he's doing Boit content. So any of you guys interested in Boit content, bottom of YouTube, all the drama, go over there. I think they were all, everybody was streaming in the morning. I don't know. Everybody's screaming about this Ruby stuff. Oh my God, what the hell? Everything exploded last night. I was on panel on Spuds. You can see our comments. Napstar might stream something about it sometime this week. Who knows? This is going to be the drama du jour. All right, but later tonight, Book of Esther, I will read it. It should take about 30 minutes to read it, and any stock market updates I will provide, and Bitcoin and such as that. So we'll see. I'll see you later, guys. Yes, big drama, Pocket Aces, big drama. I know.